presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market wise, let's take a look at it out here. We have the Dow Industrials up 61, NASDAQ flat, S&P's up 1.5. Gold contract down $9.50, trading at $2,385 an ounce. We have silver up 17 cents, $29.90 an ounce. Light sweet crude up 73 cents, $79.36 a barrel. Notes and bonds. The 10-year note up 7 ticks, trading out at 109.15. The 30-year up 10-year down 7 ticks, 109.15. 30-year down 5 ticks, 117.29. And King Dollar. King Dollar right now is trading up 129 ticks, 104.474. Euro 108. Yen 155, British pound 126 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. So first, let's bring up the futures. Well, yeah, first I'm just going to bring up the SPY, because after you get a big day like yesterday, folks, okay, you know, you're going to have a consolidation. You're going to have a timeout. That's the real bottom line. And that's what we have happening here. So, you know, we'll see how this shakes out coming into the close. And so for that, we're going to go into the E-mini. And we take a look at the E-mini out here. So you've had a flat market all day long, you know, relatively flat, that's for sure. You've had a high of 53.49, low of 53.23. And if we bring this back, what you're going to see, and we're going to be able to tell right now, which is going to be kind of cool, because this is the bar. The bar that we're on right now, folks, is going to be hard to get through, because it's going into the bar from 20 past 1 this afternoon. Now, that bar had 63,000 contracts. So what happens on something like that, whoever the sellers there, they're going to be basically selling again. So we'll see how this shakes out. The bar right before this, we only had 13,000. And right now, we are into this bar. Oh, here we go. It's not even close, man. Okay. It finished above it, but you only did 14,000 contracts. So that's telling me, more than likely, your probability is that you're going to be anywhere from, it's not a lot, man. It's like we're up 1.5 points. We're either going to be down 3 points or 7 points in the S&P. That's how kind of how this shakes out. So, you know, the 7 points is at the test of the lower bar from 2:15, and the 3 points is the high of the lower bar. Now let's go over to the Qs, NQs rather. So we take a look at the NQs, do the same type of exercise, and it's going to be the same deal. Yeah, so in the NQs, that bar is even bigger. The NQs did 27,000 contracts. We just did 7. So what's open on the NQs? Oh, this is interesting. The NQs they're gonna hit the. We're gonna know in like a minute, because the NQs are right next to the highs. We're 2 points away from it right now. So 689. 18,689 is the number. That's the high of the high volume low bar. And then the low, of course, well, the low is 661, which is 30 points below that. But if it digs into it, bottom line, that's where you can expect it to go. We go to the gold. Now, that's on a short-term basis, folks, okay? This market still wants higher price. That's the bottom line. So we take a look at the gold contract. Gold contract out here. 178,000 contracts, not bad. We got to 2402. Right now, you're at 2385. So that still wants higher price. Notes and bonds, they're pulling back with light volume. They had a big day yesterday. This note and bond market, we got to 1.5 million contracts. You almost made 110. So you're 15 ticks off the high on the 10. That's 15 ticks is a lot, man, in the note and bond market. That being said, we went up yesterday. We just missed an ABC up, I believe. It's a close call, man. Let me see this again. 2.7 versus 2.8, I think. Yeah, 2.7 million contracts were done yesterday versus 2.8. That being said, when you take a look at this 10-year, my take is that, and this broke with conviction, the 10-year is on its way to 112.04. That's the next layer inside of the, it's a decisive break. You got wide price spread, accelerated volume. We did it again yesterday. It'll build some more cars. That's where this baby wants to go. We go take a look at the, this is the one right here. The dollar, you want to really wrap your head around where the ranges are in the dollar, because the dollar came in to the lower range yesterday with conviction, meaning you busted into the lower range, which is something that the dollar's been holding really well. I mean, the dollar, busted into the lower range for all of 10 minutes on May 3rd, jumped right above it again, and it looks at this particular point that really is not holding price. But if that baby jumps on the a higher range again, then things change in the market. Right now, that dollar, my take is that let's do this. Watch this. This is kind of cool. Okay, so look at that, where we are. Whoa, baby. If you're watching Tiger TV, look at this, man. This came right down to the trend line today, the long-term trend line that I'm taking off 100.618. It's not a Fibonacci, it's actually 100.617. But you can see this trend line held today. We'll see where that shakes out, man. My take is that we'll go on to lower price, but we will see how that shakes out. We take a look at let's go to the silver market, because silver, what's happening with silver, man? Silver is really starting to get some juice behind it, man. It wants to bust this thing. So you got 86,000 contracts out here today. We are trading $29.90. It was okay, so watch this. SLV. I'm going to go to the SLV, because what's happening is that you're coming into the swing, and this is a major swing, and you're coming in with big volume. Oh, I see, but the SLV didn't have it. Unreal. Futures had it. SLV didn't have it. Stay right there, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 45, Nasdaq's down 7, S&Ps are flat. Let's go into the GLD for a second, because what we had out here yesterday, folks, PHDC, is that you had all the 13F filings, okay? So 13F, they got to be filed 45 days after the end of the quarter if you either own 5% of an equity or you move or manage more than 100 million in cash. And so I'm bringing this up right now, and what you want to be looking at as I flip this, okay? On the very end, see the 331s? Those are all the new buyers. Well, not new buyers, but you can see there's a good amount of buyers out here, man. And the ETF structure itself, there hasn't been as much buy-in in the ETF market as there was in 2016 or 2011. You know, so it's like the run in gold has actually been physical gold, and that's been the run, which is pretty wild, man. So you can see when we take a look at this, not bad, but now I'm going to go on the other side, okay? So you can use 600,000, 500,000. These are all the amount of shares, and you can see that the acceleration on the way up is pretty good. Now the sells. And the sells, look at this. This is interesting, man. You had one sell, holy cow, of 7.5 million. That's a big one. There's actually, it's pretty wild here, man. It actually looks like there's more sellers in the GLD than was actually buyers. Yeah, that's, when I just put a quick glance at it, because the first two, that's 10 million. And we don't have any million. Yeah, that's 10 million, man. That's pretty intense, man. Let's get over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at Ord, O-R-D, -oracle.com. That's Ord-oracle.com. Tim Ord, what's going on?
Well, geez, I mean, there's really just nothing bearish here. The gold market looks good. The equity market looks good.
Yeah, it was quite a run yesterday, man. No doubt. That's...
Yeah. Which one do you want to cover, the equity or the gold or the equity? First?
Wherever you want to go, man. We're all set to go, and I haven't talked to you for a while, so I've been listening to you when I'm not here. There's no doubt about that.
Okay.
You know, so I get. You know, we're still on the same deal, which is pretty cool.
Yep.
Let me ask you this? I know we were looking at the Buzzy Schwartz deal that never came in, right?
Well, it went to 0.4 to 0.6. It was supposed to happen in 10 days. It did in 12 days.
Okay.
So
Interesting.
it triggered, but not as the one previous to that went from 0.6 or 0.4 to 0.6 in 5 days, coming off that low we had in April, off that April low.
Okay.
That Zwag breast indicator that kicked in 5 days, and the last one we had took 12 days. So
interesting.
Still bullish. I mean, it's not bearish at all.
But what's cool about that?
It's coming off the low.
And what's cool about that, Tim, is that we understand. And what happens here, folks? Now you have more information because what we don't know yet, which we'll find out, is that if it does come in 5 days, we know from the last time it came in, the market went topside in a month away. So we'll see how this works. That's kind of cool, man. Understanding that, right? Yeah.
Well, actually, there's actually kind of three different. There's this WAG breast thrust indicator.
Okay.
That kicks in, 10 days or less.
Yes.
So that's 2 weeks. Then there's another indicator that's kind of still the same, a breast thrust indicator type thing, and it's a McCullen oscillator, and that goes from minus 300 to plus 300 in 30 days.
Okay.
And there's another one, a longer term one, that we actually got triggered last December 27th.
Yes.
And that was the summation index, not the oscillator, but the summation index, which is a little bit still advanced Klein type indicator, but on a bigger time frame. And that goes from minus 700 to plus 1,000, and that should happen in 2 months. And that one did trigger, so that one predicts a year out.
Which is huge, right? Which is awesome. No, and that's where we're at, folks. Okay, which is really cool. I mean, because I remember when that was coming in. I mean, it's a longer term indicator, but when you have patience, longer term indicators are strong. I mean, that's the bottom line. Yeah. Pretty cool.
Yeah, that opened the door for the summation index, which triggered December 27th.
Yes.
That kind of opened the door for the next year. Sometimes it can go a couple years, but it's like chances are the next 12 months is going to be up, and so far that's playing out pretty well. So
yeah, it certainly is.
We can start looking at the chart, see where we are.
I'm ready.
Now,
Which one you want to go to?
Let's just go to chart 1.
Okay, I have it up.
All right, the chart 1. The bottom window is the VIX, and in general, it's just kind of, if the market's going up, the VIX is going up, that's going to spell trouble. But when the VIX stays below 17, normally the market's kind of in trending mode.
Yep.
And I shaded in light pink the areas that we've been below 17, and we've been below 17 since last October. And we did have a down month in April. The VIX really didn't, this is a monthly chart.
Yep.
So it looks at the bigger time frames, and it really didn't respond. So that kind of meant that there could be a pullback here, but nothing significant. And it did pull back, and now we're back up making new highs. But so far, the month's not over yet. But as long as the second window up from the bottom is the monthly SPY VIX ratio, as long as that makes higher highs as the SP's making higher highs, that's bullish for the intermediate term.
I see.
That's what we're having here.
Yep.
The last time we was back in July of last year, the SPX VIX ratio, which is I noted in light green, we kind of went sideways, and that ratio was going higher, so that was kind of a warning. And the time before that was 2021 in October, November time frame. That ratio kind of made lower highs, and the SPX was making higher highs, and that was a big decline. But we don't have anything like that right now. So on a bigger time frame, not every week's going to be an up week, but it looks good right now. There's I guess smooth sailing for a little bit. And also I wanted to point out, I did a Fibonacci relationship here going back to 2020, the COVID crash back in March 2020.
Yes.
I took that low and went up to the late 2020 or early 2022 high and did a retracement. We didn't quite do 50% retracement. But a lot of times that's the halfway point of the next move up. If you do that, if you do those calculations, you come out around 600 or close to it. If this is a gigantic ABC up. And if that turns out to be true, that gives a target around 600, which is about 15% higher than where we are right now.
Yeah, we're at 529.82. So this is Tim. So Tim, can we, when we come back, I just want to really understand. I can do it right now. Well, a second. So the monthly SPY, is it the SPY divided by the VIX ratio to get the ratio?
Well, this is the SPY/VIX ratio. SPY divided by the VIX, right?
Okay, stay right there. Tim and I come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, Tim Wood, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow Industrials right now, 42. NASDAQ is down 12. S&Ps are off 2. We are talking markets. And so my question was, Tim, is that so when you get the SPY VIX ratio, right? So you take the SPY and divide it by the VIX. Is that how that works?
Yep. Yes.
Cool, man.
Divide by the VIX.
Okay, great.
And so if the SPY is making higher highs and that SPY VIX ratio is not making higher highs, that's the divergence. That's the time you got.
I see it. No, and I can picture it because that would make sense. The SPY goes higher, the VIX goes lower, so that means that people think there's going to be more buy-in. You divide that, and that's always going to be a higher number. Cool, man. Okay. And then the 50% retracement that we're talking about here, that's pretty cool because that was quite a run, you know. And we're talking about the top chart now, folks, okay? Because that was quite a run to have that it even didn't do a 50% retracement. I mean, it almost did, but that's a strong market in itself, right?
Yeah, it's a strong.
Yeah.
It couldn't even get down to 50% retracement.
Right.
And so if you do the ABC stuff,
yes,
this thing could, and it's kind of playing out the deal. I want to point out another thing on this chart that works pretty well. And it's low tech, which works for me.
Yeah.
But anyhow, I got some circles on the red circles on the SPY chart or on the monthly chart.
I see that on the way up and then at the very top. Yes.
Yeah. So I circled the times when 50% of the trading range closes above the mid Bollinger Band.
I see.
And whenever time that happens, usually the next month is a down month, and we had that in April's down, so we had that in March. If you look at March
we did
this year,
yep,
yeah,
and you nailed that. That was awesome.
Yeah, I'm thinking, April's probably not going to be up,
right?
And so it did. I didn't trade it the best, but anyhow, I did have that warning for now. But now we're breaking new highs, so everything kind of looks pretty good. So
yeah,
let's flip to chart 3.
Okay, I have it.
And this is kind of this is a weekly chart. So I always kind of look at the monthly chart to see where we are. If the danger is going to show up, it's going to show up on the monthly chart. So then I look at the weekly chart, see what's going on. And kind of a similar situation I got 2 circles on that chart. The middle chart is the weekly SPYs. And kind of the same thing happens. If the market gets too exuberant to the upside or downside, a lot of times you get a close above the mid-Bollinger Band, especially if you get a 50% above the mid-Bollinger Band or the downside mid-Bollinger Band. Usually the market's going to reverse. And I want to point out those 2 times. It works pretty well on the weekly chart. And even, going back December of 2023, I didn't circle them there, but you kind of got above the upper Bollinger Band there, if you can see it.
Yes. I see it. Yep.
Late 2023. I probably should have circled it. But even that, just a little bit above the upper Bollinger Band, the market kind of just stalls a little bit. And the point I'm trying to make here, we're not even close to a Bollinger Band here. We're still below the upper Bollinger Band. So we can probably rally at least to it, and hug it. And as long as we stay on it or below, we'll probably be fine.
That is so cool, right? Now, and which Tim is explaining here, folks, which is cool, and Tim knows it. Plenty of listeners know it out there too. When you hug that line, as Bollinger, I remember when he was on, and I remember, this is so long ago, Tim. We had him on, and you were on with me then, I think, because remember we had the 3 of us we were trading. We used to have 5 people on the phone sometimes, and. We were talking about Yahoo, and Yahoo hugged that line all the way up for like a year and a half, man, and then blew up, okay? But hugging that line's a big deal, right? Wow.
Yeah, I remember him saying that, too. Yeah. But, it's right. You don't want to really go above it because that'll stall the market. But if you can just remain right below it, and that's good because if you go up too fast, you're going to come back. And momentum is really plays a big, important part of the market. If it goes up too fast, goes down too fast, you're going to have reversals. But if it just creeps up day after day, that's the ones that can really just keep on going.
Yeah.
But I wanted to show you on the second window up from the bottom is the weekly SPY SPY VIX ratio.
Right.
And you can see it a little bit better there. You can see the S&P's making higher highs. I noted that in light green. And that ratio, SPX or SPY VIX ratio, is also making higher highs. And that's exactly what's supposed to happen for this trend to continue higher. So, anyhow, it looks good.
It does look good.
It's not going up too fast. It's, nothing really worrisome here. So anyhow, I wanted to point that out. Let's get to the gold market.
Okay.
This is starting to be fun, and actually, everything's starting to work out pretty well.
Look at this chart, folks. You got to see this chart. This chart's amazing.
Yeah, it really.
You did a lot of work, man. Thank you for all this work, Tim. This is a lot of work on this. Wow. Okay, cool. I'm ready.
All right. So anyhow, this is a monthly chart, and we kind of been looking at it for the last, several weeks, and this is a chart that's got to kick in to really get everything going to the upside. And what it is, the top window is just the monthly GDX.
Yes.
And I got pointed out there, circled in blue. You should see a sign of strength. That's SOS. And I think that's a neckline. And I'm thinking we're having the sign of strength right now, because this is on a monthly chart, and we're having a sign of strength through that neckline. But anyhow, it's still developing. We're still doing it. But next window down is a monthly GDX GLE ratio, and it's a little bit whippy, so I use it with other indicators to really kind of smooth things out. But ideally, you like to see that indicator, the monthly GDX GLE ratio, above the mid-Bollinger Band. If you go way to the right, I have a window there.
Yes.
And I got circled in blue where we are right now. And that Bollinger Band has turned up, and we're pretty much on the Bollinger Band. To me, if we can hold here or move higher, because the month's not over yet, this is a monthly chart. We've got 2 weeks to go. That would signal a bullish signal. The next window down is the monthly GDX advanced decline, and it has to get above its mid-Bollinger Band.
Okay.
And it's way above it right now. And so that most likely is going to be triggered by month end. And the bottom window is the monthly up-down volume. Same thing happens there. It's above the mid-Bollinger Band right now. So all three of them, if we close right here on month end, that will suggest at a minimum we'll go up for the next year and a half.
Get ready to party, folks.
It's a big signal.
It's a big signal. Well, we won't jump the gun, but we are excited, Tim. There's no doubt about that. Stay right there, folks. Tim and I are coming right back. We have the Dow Industrials right now trading up 22. Nasdaq's down 23. S&Ps are off 6.5. Tim and I are coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim Moore, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow right now up 7, Nasdaq's down 30, S&Ps are up 7.5, and we started talking futures, folks. Okay, that last bar did have volume, so this baby wants to. Go into a slightly lower price as we come into the close here. Tim, we get a call that we're going to go out to beautiful Montana and see what our man Bill has to say. Bill, what's going on?
Not much. Hey, Tim, fabulous work. Love it. I have two general questions for you. First, do you apply all of your analysis to platinum and palladium, and if so, what does that show? And secondly, do you apply it to Newmont and Barrick as the key components of GDX? And if so, do you ever get any leads or lags from them? Thank you.
Actually, I don't really cover Newmont, or I look at it, but I kind of focus on pretty much GDX because that's the whole combined market. So I really don't break down anything. So I really, obviously, if GDX is on a buy signal, then Newmont obviously will be a bullish situation. But I don't have that chart right in front of me or either one. But as far as the metals go, I haven't. I'm kind of looking at gold and silver. And that remains bullish, but I haven't really looked at other metals, so I really can't help you.
Bill, if platinum's on the run right now. So, do you own platinum? Are you looking to buy it or the PPLT? No, he hung up, I guess. So, it's interesting because what has happened, Tim's platinum's been a dog, but it just went from $897 to 1,062 in like 15 trading days. So,
wow.
Yeah, it's starting to.
I'm thinking all the metals are going to kind of go here.
I'm with you, right? And
is it?
No, go ahead.
But anyhow, I'm thinking it's just the metals over the last several years has just been terrible, and
yes,
I think everything's going in cycles here. And so I'm thinking, and maybe not this year, but I think the equity market's probably going to slow down because of the interest rates. This is not technical analysis I'm doing here. This is kind of opinionated. And metals have been, in the doldrums for a long time.
Yes.
You get a couple of months rally, and they come back at you. So I'm thinking this is a time that's probably setting up where you and I got acquainted back in the 90s where this gold market went through the ceiling. I'm thinking that cycle, is starting to recycle again. And I'm thinking we're coming because we got some long-term signals here that are triggered that, are multi-year triggers.
Right.
I'm thinking, so all the metals are probably going to move together, in my opinion.
Yeah, and folks, that's how they normally move. And as Tim is speaking, so what happens is that when you have these lengths that everything's in the doghouse, and I'm not talking about stocks, because what happens, some stocks will be staying in the doghouse forever. What happens with metals, they're cyclical, period. I mean, that's what you absolutely should do, too, if you're in the gold or silver market, is understand that, so in a year and a half from now, you'll sell them. Because I had way too many folks not sell them in 2011, you know. And I understand it, because you think that it's going to go higher and higher and higher. Well, you know, everything is only so high and so low, basically. You know what I mean? But, yeah.
I totally agree with you.
Okay, so let's see. So we're on chart number 3, Tim.
Chart number 4, actually.
4. I'll go to 4. Oh, no, I'm in 4. Yes, I'm on 4. Okay, cool.
All right, so 4. So now you want to see, are this, we got 2 weeks to go before the month closes out.
Yes.
Are these momentum type indicators are going to stay above their mid-Bollinger Band? So I'll answer that question on chart 5.
Okay. I'm ready.
So chart 5.
Yep.
Now you got the same indicators. The bottom window is not a cumulative; it's an 18-day average. So that's a 3-week, 15 days. So that's about 3-week moving average.
Yes.
Of the up-down volume, which is the bottom window. Next higher window is the 18-day average, and anyhow, the blue, when these indicators are above -10, both of them, the bottom 2 windows, or the bottom 2 indicators, which are the bottom 2 windows, are above -10, which is the actually light green area, the market is an uptrend. When they're below -10, market is in a downtrend.
Yes.
And actually, you get divergences too. If you notice, we got above the -10 on both indicators, basically round off, I don't know, March 1st or end of February. Let's call it March 1st.
Right.
And so we've been above -10 since then. And if you notice right now, this indicator is actually getting stronger.
It is.
Because we're actually hitting higher highs as over the last couple of weeks. And also the
like we're at plus 20.
So what that means is we're not even near -10. We're actually gaining strength here. And you're gaining strength exactly where you're supposed to be. Let's go back to chart 4.
Okay.
And top window.
Yep.
That's a head and shoulders bottom, and I drew that blue line there.
Yes.
That's the neckline of a head and shoulders bottom. And to get through the neckline, you have to have a sign of strength to confirm it's Weisskopf. You have to have a sign of strength through a trend line to have a valid break to the upside. And that's the reason why I have that SOS there.
Yes.
That's the neckline. So exactly, if you go back to chart 5, that's exactly what we're doing. We're gaining strength right through that neckline, which is around 34. I don't have it drawn on this chart.
Okay, that's cool to know. Yep.
It's
and right now, folks, we're at 35.
Right, so
64.
Let's go look. Okay, well, another chart, a little bit bigger time frame. Let's go to chart 6 real quick.
Yeah, hey, we busted that neckline really nice. I see what you're saying, man. Okay, cool. Okay.
Yeah, so now you can kind of see. Now the bottom window is a 50-day average, so that's like 2.5 months.
Yes.
So this indicator works similar. It has to be above 0. As long as it's above 0, you're in an uptrend. So it looks at the bigger picture. So we're actually gaining strength there too. We're almost close to the highs here of close to 20, where we're at. I can't quite read. It looks like about 15 or 14 or so. But we're gaining strength going through that neckline. There you can see the head and shoulders bottom we're talking about. And this head and shoulders bottom has if you do the measurements, you have an upside target around 50. So we're at 35, 36.
It's a big number.
Area.
Yep.
So we're not backing away. Chances are we're going to be staying up, if not going higher, over the next 2 weeks, according to these shorter-term charts. So if we flip back to chart number 4.
Okay, I have it.
That's that monthly chart again. So we're wondering if these charts are going to hold and go above and hold above the mid-Bollinger Bands. Well, according to the short-term charts, we will.
That is some nice analysis.
If you get my analysis, what's going on here.
Oh, so. We get it. We get it. You stay right there, and we're going to do chart 6 as soon as we come back, folks. We have the Dow Industrials right now trading, where are you, baby? Up 35. NASDAQ is down 25. S&Ps are off 5. Tim and I are coming right back, folks. So don't forget, you can get hold of Tim at ord-oracle.com. Coming right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tim Wood, Tom O'Brien. We have the Dow up 56, Nasdaq's down 17, S&Ps are off 1.5, and I have number 6 up, Tim.
Yeah, 6. Okay. You know, this is the bottom window is a 50-day average of the up-down volume. Next higher window is a 50-day average of the advanced decline.
Okay.
And I worked a lot of different, tried to figure out. Anyhow, this one, if the GDX keeps going up and these indicators are actually starting to go down, you get a negative divergence. But that's not happening here. Both of these indicators, the bottom window, the bottom window and the next window up, are staying above, the plus 15, plus 20 area.
Yes.
So I'm thinking, as we're watching GDX here, it's not going to back off. These two indicators are too high above the zero line. If they were trending down, I would say, we're going to back off on the GDX, but they're not doing that. So I'm saying over the next 2 weeks, GDX, in my opinion, will be higher than where it is right now. And I'm thinking we're eating through that neckline, which is that top window indicator, which is GDX. We're not going to go 50 right off the bat, but we may go, 37, 40 area,
Sure.
then possibly pull back to the neckline, then maybe go up to 50 later. I don't know. But ultimately, we'll get to 50, if not even higher. But these indicators, this is like it's a 50-day indicator, so it's like 2.5 months of analysis. So this is, what I'm trying to say is this is remaining strong. It's not backing away.
Yeah,
at
and
all.
you can see it, folks.
I think this is going to keep going here.
You know what's so cool, Tim? You can see it if you're watching Tiger TV. And remember, it's archived, folks, so you can put it on tonight if you're driving. Because you can see that it's taken out a long consolidation, too, right?
Yeah.
Yeah. I mean, that's pretty intense. Well, listen, Tim, it's always
I think
a pleasure.
Gain strength.
Yeah, huge.
From here, because it's gone sideways, and that's building energy for the next pop.
Absolutely. Well, Tim, it's always a pleasure. You have a great one, a safe one. Look forward to speaking to you on Tuesday, and I'm going to be here Tuesday, Tim. Have a great one, man.
All right, good. Love to have you.
Absolutely. Have a great one, folks.